All right, guys, for this episode of Learning to Read Charts, we're going to talk about how to buy like a professional in a bull market. We're in a bull market right now, and I figured this is an appropriate video, especially with SoFi going higher and Rich Tech Robotics going lower. So look at Rich Tech Robotics. If you were in that one stream we were talking about, Rich Tech Robotics, when I would told you guys, hey, I'm buying big here at $7. If this holds 7, we go to 8, then 10. There's a lot of money to be made here. What happened? I took the loss, right? You guys remember if you were in the live stream, I took the $400, $500 loss. And I'm glad I did because I wasn't going to hold this all the way down to the purple line, which we know it likes to come back to. So the professional thing to do, right? If you have been watching these videos, congratulations. If you are watching these and actually learning, you're already head and shoulders above most people because most people aren't professionals. They're just going to buy their calls and their margin and loans and all that other garbage. Okay, so I bought shares, bought a lot of them, and I took the $400 loss because if I'm chasing the top here, expecting it to break out and go higher, yes, there's money to be made, but if it doesn't, if it reverses and starts tanking, let's take the loss, right? Because we're not going to hold the bag all the way down like an idiot. We're professionals. And if you've been watching these videos, you know how to measure how extended we are above the purple line. We are 118% extended above the purple line on that day that I was streaming, buying all those RR shares, and that I had to take the loss on. Not because I wanted to, trust me, I don't like losing, but because I had to, because that's the professional thing to do. If you're chasing highs on a stock like this that does not trend on the yearly time frame, you got to take the loss and reposition. So how do you reposition, right? How do you reposition? Well, you look for key levels of horizontal support. This is the easiest thing you can do. You grab your horizontal line tool, and let's just look right now. We're tanking, right? We're tanking, sell the news, right? We're tanking, downtrend, right? Purple line all the way down here. Where's our next support level? Well, there's a support level here, but we're clearly breaking that. We're not even respecting it. The next one is down here at 502. So, and it hit a low down here of what, 468. So it would make sense, like just based off of the level, hey, if there's a buy opportunity on this, it's not up here, it's not up here, it's down here at $5. You can even maybe go as low as a 467 because that's the low here. It hit a low down here. So I would grab another horizontal line and just to measure out the low, right? Measure out the low, make it white so you know like, hey, that's the lowest point it went to for that support level there. So now you know where to buy. This is how you buy like a professional because the people who bought down here at the support, right? This was very clear support. What happened? The people who bought there, the smart ones, the professionals, what happened? They bought in, they set a tight stop underneath, and moved like 30% from that horizontal support. That's it. That's how you buy stocks in a bull run at key levels of horizontal support. Now, one thing I do want to mention is when you buy, you have a stop loss because then you have the best risk to reward ratio, right? If you bought here at like let's say the absolute tip here at 471 and you set a stop loss at 464, it never came down, and you have like the best risk to reward ratio by doing that. And if that's how you're gonna play it, remember, you decide when you buy. Never ever let the market, listen what I'm about to say, never let the market decide when you buy. You fucking decide when you buy. You do not let the market decide when you want to buy, okay? So if Rich Tech Robotics is going to come down here, you don't just buy because, oh no, it's down here, let me just buy because it's supposed to be a buy. No. You decide where you buy. If you tell yourself, you know what, I want to buy at exactly 472. If it comes down to 472, that's exactly where I'm buying. No more, no less, 472. That's the game plan. That's the game plan. You're right now, you know it's coming down. The game plan automatically is I want to buy at 472 as low as possible. But Shades, what if it runs away? What if it goes to 473 and then it just runs 50%? Oh no, boo-hoo, who gives a shit? The whole fucking point is to be professional. You got the game plan. You wrote it down. 472, I buy, stop loss, 10, 20 cent stop loss. And if it bounces here, I can make 10, 20%. And it's a good risk to reward ratio. You'll lose a little bit because you have such a tight stop and you're buying at a key horizontal level of support. But if it runs away, that's okay. Again, you don't chase that. You just go, oh, It didn't come down to the exact level that I planned for. That's okay. There's plenty of opportunities elsewhere. That's how you buy the dip like a professional in a bull market. It's that simple. Horizontal support. You write down exactly what price point you want to buy. If it comes there, great. You can even set a limit order, and you don't even have to watch it. Although I prefer to watch it because I use a MACD strategy to enter. But the point is, you decide. You decide. Not, don't let the market decide where you buy. You decide. So there you go. That's the lesson there. So RR. You know how to measure extension, right? We're still extended quite a bit. It can still come down quite a bit, right? So if you do buy here and it decides to come down to the purple line, that's a long ways down, right? That's still 40% drop. So you know that because you've been watching these videos. You're a professional. You're trying to be a professional because if you're watching these videos, you're actually serious about this. Most people don't give a shit about this. They just want the alerts or whatever. Get rich quick, all that nonsense. This is how you do it. I just told you, everything's a game plan. Everything has a game plan behind it. Everything's there's a purpose behind every move, right? Everything is purposeful. There's no like, oh, I hope. No, hope is not a strategy. Everything has purpose. Everything you do, every button, every click, every little thing you measure, it's all with purpose and intention. Now, you don't want to hold the bag, right? If it drops to the purple line, that's 40% down on the shares that you buy here. It's better to take that 3, 4, 5% loss, reposition at the purple line if it comes down there. And that's where you know, like it likes to, make some big moves, right? So that's really the purple line strategy is a whole nother video in and of itself. We're just talking about stocks that are trending to the upside that pull back to support levels that are very key for them to hold. That's the professional thing to do, is buy at those key support levels. Let's go to SoFi, because SoFi did the opposite. RR did not break out. What happened? I took the loss because I chased the top here. It did not break out. I take the loss, move on. It is what it is. Not going to cry about it. But I wasn't going to hold the bag all the way down, right? Because that would be stupid. That would be the unprofessional thing to do. Now, SoFi here, I'm actually going to chase this top. I'm actually going to chase this top tomorrow, because we should see a pullback tomorrow. I'd be surprised if it didn't pull back. When you get a breakout, the normal thing to happen is a pullback, right? Here's a key level right here. We broke above it, and then we pulled back to that same level. Whoa, it's almost like anytime you get a breakout, there's some profit takers that push it back to that level. So that would be expected. It would break out and then pull back to 30 and then go higher. That would be normal. That would be expected. It's essentially taking a breather. If it doesn't, that's actually insane. And oh well, boo-hoo to me. I guess I won't be buying because I fucking decide where I buy. I fucking decide when I buy. Remember, you don't let the market decide when. You decide when. So if it doesn't pull back like it does here, fucking cool. Awesome. Goodbye, SoFi. Plenty of opportunities elsewhere. Again, it's about being professional. So SoFi is actually breaking out, right? This is the kind of move I was waiting for on RR. I was hoping RR would break out above 7, hold above 7, go to 10. It didn't happen, took the loss. Here, on the other hand, it's actually going higher, and it might just run away from me because I think it's going to go to 40, then 50. And I might chase. I literally might because this is a different kind of level. This stock, there's levels to this, right? This company is on another level from RR. And here's why. And if you guys have been watching my videos long enough, I talk about this all the time. If a stock trends on the yearly time frame, it's very hard to lose because you can buy the top and it always goes back higher, right? You can even look here. Let's pretend I'm a huge idiot. Shades is just a fucking dipshit, moron, cockface. These videos aren't going to go on YouTube, so I can say whatever the fuck I want. But let's say I'm just a dipshit, cockface, moron, and I buy the top here at $8. Whoa, it came back up for me. And let's say for some reason I buy at the top again at $10. Whoa, it came back up for me. Let's say I'm a huge idiot and for some reason I'm just really good at buying tops. I buy 11.70. Well, I had to hold through a lot of pain here, but it did eventually come back up for me right here on this big green candle, the 13. And then let's say I bought the top again at 16, came back up for me here. Let's say for some reason I sell and then I buy back in at exactly the same point I sell for some reason because I'm just a huge dipshit moron. I buy at 18 and whoa, it came back up for me again. Went to a high of 25. Let's say I bought at 25 like an idiot. Oh wow, now it's oh my god, it's almost like stocks that trend on the yearly time frame. They just keep going higher, right? So it's hard to lose. You can literally be a dipshit fuckface moron and you still walk away making money. This is why I always tell people, if you want to trade easy mode, just buy stocks that trend on the yearly. Like, I can literally chase SoFi, and even if it comes down to 30, I know it's going to come back up for me. I could buy the top on SoFi every time and I'd still be profitable. That's the fucking point. And look at the yearly time frame. What does it do? Whoa, like every year just keeps going higher. Holy shit. Now let's compare to Rich Tech Robotics. This is why I took the loss on Rich Tech Robotics. This is why I did not want to hold it. Is this also going up year after year? Oh, no, it is not, my friend. It is just going sideways. It is just going sideways, right? So if you're an idiot like Shades buying tops, well, if I bought a top here, which I did, but again, I'm a professional, took the loss, whatever, boo-hoo. What happened when I bought here? I took the loss. But what if I hadn't? What if I wasn't a professional? What if I was just a huge dipshit moron who doesn't understand, how the market works? Well, I would buy the top here, hold it all the way down. And I would have to hope it comes back up for me. Maybe it does, maybe it doesn't. But this thing, I would have gotten destroyed already, right? Like, look, I bought the top here, came down, came back up for me, bought the top here, came back up for me, bought the top at 12.29. Wow. I never recovered until, haven't recovered yet. So I would have gotten destroyed here because I'd be holding a big bag at $12, and this thing has not gone back up there since 2024 of last year. Really? Yeah, damn. So yeah, it just comes to show you that a stock that does not trend on the yearly, maybe it'll come back up for you, but I don't like hoping. I'd rather just get out. And if you just want to make life easy, just trade the good ones, guys. This is why I always pound the table. I get it. You want to trade shitty $5, $3 stock because, it moves to 10. Oh my God, 300%. But if you want to live on easy mode, and this is why I don't make as much as some of you, because some of you definitely make way more, like way more. Like to this month, I think I'm up like 3K, which is cool. I usually strive for 5 to 6K, but 3K, that's fine. This is why I live under my means. Yeah, under my means. This is why I live in an apartment still. This is why I'm very frugal. I eat fucking kidney beans and rice. Like I'm not a materialistic person. Number one. Number two, I don't, what do I need a car for? I don't go anywhere. Number three, I'm just very, it's better to live under your means if you're trading for a living, because then you don't have to put pressure on yourself to, oh my God, I live in a very fancy 3.6K rent a month apartment on the 20th floor, which I could rent out, which is like 5 miles down the road. I could live there and it would be nice. Oh, those apartments are so nice, but that would put a lot of pressure on me to make 3 times as much. So instead of 5K every month, I would have to make 15K every month. That's a lot of pressure that I'd be putting on myself, right? So it's better to live under your means. That's just a little, that's another topic for another video. If you want to do this for a living, you're going to have to live under your means when you start out, until you get comfortable with the fact that you got to make this money, right? Trading. And really, once you do it for a living, you're going to want to trade what's safe. You're really not going to want to take risk on stocks that can drop 50. Like, you just can't trade for a living until you're actually a professional. You take your fucking losses and you know where to buy. Nvidia, right? It broke out here, this key level, and what did it do? It's headed to, what did I tell you guys? I told you it's gonna go to 200. That's it. Oh my God! It's almost like I'm not a genius, but it's almost, I'm being sarcastic when I say this. Oh my God! It's almost like I'm a genius, but I'm not. What does it do on the yearly time frame? It just keeps going up. So it was obvious in a bull run, stocks have to break out to go higher. I was looking for that on RR. It didn't happen. Oh well, boo-hoo, take the loss, move on. Here, you could have bought at horizontal support at the top here, came back up for you. You could have bought the top here, came back for you. But like, I'm just going to keep rinsing and repeating. You could have bought the top on Nvidia all these years and you'd still be profitable. If you're going to be a professional and you want to make the most and not be the one buying tops, look for those horizontal support levels, right? You got a horizontal support level right here. Surprise, surprise, what happened? What happened here? This is a horizontal support level. Buyers showed up here multiple times, and then it's, went higher. So there you go. That's how you make money in a bull run. That's why everyone is a genius in a bull run, because you can just buy and it just keeps going up. But if you want to make the most, you buy at key levels of horizontal support. I'm not going to talk about the EMAs because that's a whole nother video. The EMA, the WMA, the MA, the moving average, the regular one. I'm not going to go into those because those do act as support, But that's gonna make this video too long, and it's already quite long. So that's all I gotta say. Measure those, like, you got to practice, man. You got to get your, it's like boxing, you got to get your rounds in to get used to getting punched. Got to slip, dog, pivot, turning your opponent, clinching. None of that is automatic. I've been there. It's not automatic. Moving your head off to the side to avoid a punch is not automatic. I remember I would just pull my head straight back, but I keep getting hit by the crosses and the jabs because I got stunned. I remember I was just stunned out on my feet because I was keeping my hands down like an idiot. But also I was just like trying to avoid the punch by pulling my head back. That's natural to do that. But in order for you to move your head off to the side, off the center line automatically, you just got to practice that shit over and over again. That's just how it is. Like, that's just how it is. That's just how nothing becomes automatic until you do it enough. Let me put it that way. You got to look at the charts and do your analysis. Oh, horizontal level here, horizontal support level here. I sold a put today at 192.5. Why? Well, we just broke out above a key level here at 193, 184, and we went to 200. So I'm kind of betting that it's going to come back down, right? I'm kind of betting it's going to come back down and pull back to that same level, right? Because that would be expected. You break out, you pull back, then you go higher. But guess what? If the stock goes to 205 plus, I still make my money on the sold put because it's never gonna be exercised. It's gonna expire worthless. I'll keep my $300 premium or whatever. So there you go. I can go on and on. This is easy mode. Easy mode. If you're trading good companies, easy mode. If you're trading garbage, like stocks that aren't trending on the yearly, like RR, you better buy where it makes sense. You better buy. I'm telling you right now, you could probably be way more profitable if you are willing to trade riskier stocks, but you gotta be professional and take those losses. Because again, I'm sure that I'm pretty confident Shaz is making way more than me at this point because she's already shown me her account. She makes way more than me per month. Like, I only make like 3 to 5K a month, and that's fine for where I live because I don't live anywhere expensive. Nice little quiet neighborhood. People, it's a nice area, but the rent is cheap because I've been living here for a while, and I know the people. But anyways, that's a whole nother thing. The point is, you can probably make more than me if you are willing to trade shittier stocks that have more reward potential. But I hope one day you do this for a living so you can see, like, holy shit, I only have this one source of income. I need to fucking be on point. Maybe I shouldn't trade something risky that can gap down overnight 50%. Maybe I should just stick to, Nvidia, right? Maybe I should stick to something that recovers always, that just keeps going up. So I think that mindset you'll get there at some point. Because if you're watching this, you're already, like I said, head and shoulders above most people. And by the way, as I'm talking, write notes, write down the rules that I'm talking about, take notes. A lot. I just divulged a lot. Divulged. I don't know what that means. Hopefully it means what I think it means. But there's a lot to take away from this. Be a professional. Buy where you want to buy. Don't let the market decide where you buy. Set the stop loss. You have the best risk to reward ratio at key levels. Trade stocks that only trend on the yearly. If you're going to trade stocks that don't trend on the yearly, you definitely have to take your losses. That is it for the video. I'll see you in the next one.